give a second chance to RBL Bank, worth a bet or just stay away?
Good afternoon, Anuj. So, I think it's been something which needed repair, and I don't know in the first place what was terribly wrong with it, except for the fact that there were certain regulatory issues that could have probably snowballed in very simple terms, I must say. But that's been kind of clipped at that stage when nipped in the bud or whatever, and things probably could start normalizing for them. They've had certain setbacks with Bajaj Finance, the card business, probably looking at on its way out, and some of the fundraising plans would probably make sure that the balance sheet gets a bit stronger. So there are lots of triggers that we've heard of, but I wouldn't. Banking is giving such a lot of opportunities, and Anuj, you know about it. It's probably the sector to be overweight on at this point in time, and you have much to. You're spoiled for choice, actually. Even if you want smaller private sector banks, there are many which are far superior. In fact, if there is repair that you want to buy into, IDFC First is probably better than anything else at this point in time, given all the stuff that they've done. In fact, nobody believes it will do well because it's been talking about. I mean, there's been expectation around it. It hasn't happened. But that's precisely the reason why people are giving up and there's an opportunity. So RBL Bank, I would pass. A large pension fund can do it because they have a very different allocation methodology. But with scarce capital, I would look at something much more definite.
Okay, all right. Prakash, since it's FNO, we're definitely going to be tracking the headline index, which, by the way, has slipped a little bit. But a few stocks, or one stock at least, will not be eligible for trading in the FNO market from tomorrow. That's Nippon Life AMC. And the stock is under some pressure. It's down close to around 3%. It could be a technical factor at play. As of now, the total open interest is down by close to around 5 lakh shares odd. That's down by close to around 39% odd. Remember, there's still close to around 7-8 lakh shares that are out there. So anyone's guess which way it's going to swing. If there are too many shorts in the system, maybe you'll see a bit of a pop. But for the time being, there is unwinding out there. So a technical factor is putting some pressure on Nippon Life. Prakash, any view on this one? It's at around 304 rupees odd.
Yeah, so I've been keeping the stance very clear that all asset management businesses will keep on continue to grow in a secular trend. Timing could change a bit for each of them, but whether it's an HDFC or a UTI or a Nippon, because the growth of the industry, underlying industry, is now fairly undifferentiated for most of them. What you have to work towards or play on, if you are convinced with this industry growth, is the CAMS vehicle, So I think the CAMS management has made it amply clear in terms of what trends they have on a granular level they are seeing. And if that were to kind of continue even for the next 3, 4, 5 years, I think CAMS or any dips would probably give you that kind of a comfort of riding on whether AMC-A or AMC-B works. So I would look at doing it through slightly a different route. Not directly through a Nippon, though I do understand that today's technicality could give you some trading opportunities, but I'm not very adept at that part. But from a longer-term perspective, this is how I would think.
Okay, looking more at CAMS instead of any of these AMC companies. Got that, Prakash. But let's talk about the auto ancillary space with Prakash tracks very, very closely. Balkrishna Industries. In a relatively strong market, that stock is under some pressure. Few brokerages are not too upbeat on the stock. Sonia is with us to run us through all of those details. Sonia?
Well, thanks a lot for that. So Balkrishna Industries is down about 1% in a rising market. And the reason for that is that the agricultural segment to which Balkrishna Industries caters is under a lot of pressure, especially in the European region because of the challenges there. So Kotak Institutional Equities put out a note where they retain a sell on the stock. They say that the agricultural segment volumes in Europe are under pressure because of the severe drought conditions that has resulted in a lower production and hence lower demand for agricultural tires. As we know, Balkrishna Industries supplies tires to the agricultural sector, and this could put pressure on agri demand, they say. Now, agri-related demand forms 66% of the overall volume mix for Balkrishna tires, and they get 54% revenues from the European region itself, and hence their earnings could be under pressure. Kotak says there's a downside risk to the company's FY23 volume guidance of 10 to 14%. HDFC Securities as well has initiated a coverage. They have a reduced rating on the stock. They have a target price of 2,093, which is somewhere around the current market price. But they believe that the macro challenges will definitely hurt the earnings visibility of the company. Also, Balkrishna Industries margins are already at a multi-quarter low because of higher raw material costs and higher freight, logistics, etc. That could be under further pressure.
Okay, all right. Thanks a lot for that. Sonia explains why the stock is down close to 100% odd. Prakash, any view on some of these tire-related stocks and Balkrishna Industries in particular?
So, Nigel, Balkrishna, I don't have a view that's divergent from what Sonia shared from some of the brokerages, because it's a given. You will have this company struggle in its key pocket areas, and they are also unfortunately sitting at a point in time where they've built capacities, and those capacities had just started kind of showing the improvement. We saw the stock rally on the back of all that in the last few months, but this correction is probably going to be a bit deeper, and the best thing is to wait for some trigger. If they were to start focusing on the US market, realign themselves on the product mix to start supplying to off-roaders in the US rather than to Europe and within agri. So, those kind of things will happen. I'm sure the management would also be open to doing those things, or, proactively looking at those options. So that's the time to look at buying into it, and the bottoming out could happen. Right now, the rollovers tell you it's already 91% rolled over on the short side to the September series. So the downtrend will probably continue for some more time.
Okay, the market, by the way, has all of a sudden taken a bit of